Can you actually get a decent or even a good response from AI when asking for investment advice? I want you to find out, so I asked AI to create an ultimate dividend ETF portfolio. One that delivers consistent income, grows over time, and beats inflation. So for the dividend investors out there, buckle up and let's see what AI gives us. A couple of weeks ago, I sat down in front of my computer and asked ChatGPT to create the perfect ETF portfolio, which ended up becoming an interesting YouTube video of mine. And right on that video, a viewer called Narsuitus asked me, please ask AI to build the perfect ETF dividend yield portfolio. Alright, of course I'll do that. Another comment from 3pat11 said, try Perplexity, which is another free AI tool that I actually didn't know about. So here I am, sitting in front of my computer, setting up the experiment in ChatGPT and in Perplexity AI. Build the perfect dividend ETF portfolio, one that delivers consistent income, grows over time, and beats inflation. Here are some strict rules to follow. Dividend focus, the ETFs must prioritize companies with strong and long dividend histories. Diversification, no over-concentration in one sector or region. Yield and growth balance, not just high yield, but also long-term dividend growth. Low fees, because we don't want crazy expensive ETFs. Sustainability, companies should have a strong history of increasing dividends, not just high payouts, and prominent ETFs. Don't suggest niche ETFs only based on short-term trends. Now, AI is not perfect. It actually does a good job of putting together a lot of information within a couple of seconds, and it does give you a general understanding, but there are some crucial problems, and that's what I try to avoid with the 6 rules I gave him. One of the issues is that next to good ETFs, it often gives you some that are just trendy at the moment. Kind of dumb money advice. Another thing is that it builds portfolios based on historical data and internet content research. It doesn't have experience or foresight like a human investor. Last thing, AI picks ETFs based on past performance, but doesn't consider real-world risks. It doesn't really know if the economy is on the verge of a crash or how investors' emotions are today. All that said, it does a pretty good job at giving you an overview of good choices. But let's get now to what AI actually picked. Let's break it down, starting from ChatGPT. So here's an ideal portfolio that balances yield, dividend growth, diversification, and low costs. The first part is the core dividend ETFs. Stable, reliable, and growing. The 2 ETFs that ChatGPT selects are VIG, the Vanguard Dividend Appreciation ETF, and ACHD, the Schwab US Dividend Equity ETF. So far, so good. These 2 are, in my opinion, the best dividend ETFs, and they should never miss in a dividend ETF portfolio. VIG and ACHD, by the way, are really different. They have a really low overlap of just 12% per weight, which means it's totally okay to own them both, and are, in my opinion, even complementary. VIG is the biggest dividend ETF in the world per assets under management, with over 10 billions more than ACHD, and has a really low expense ratio of 0.06%. And also, it focuses on companies with at least 10 years of consecutive dividend increases. The yield is lower than average, with around 2% per year, but it has a strong capital appreciation. So if your capital grows faster, the 2% that you get every year becomes more and more every year in absolute dollar value. Another interesting thing is that the VIG includes a blend of value and growth and contains 337 companies, which makes it a good addition to a dividend portfolio because it's diversified and helps you cover also the growth part of the market. The second core ETF, SHD, is an ETF that doesn't need an introduction. It's one of the most loved dividend ETFs. It has a wonderful long-term performance and gives a dividend yield of around 3.5%. So what more can you ask for? SHD tracks the Dow Jones US Dividend 100 Index, and the goal of the ETF is to find quality, sustainable, dividend-yielding companies. Companies are chosen if they have 10 consecutive years of dividend payment, a high market capitalization, high dividend growth over the past 5 years, high free cash flow to total debt, high return on equity, and expected forward yield. So a lot of important factors are actually used to find and select value companies that are able to deliver stable and high dividends in the long term. But now let's see what Perplexity AI chose for us. Interestingly enough, Perplexity chose the same 2 core dividend ETFs, VIG and SHD, even though Perplexity is not based on ChatGPT. Here I also get a percentage for the core positions, which is 60%. So I guess 30% VIG and 30% SHD. Alright, the second part of the portfolio is made for global diversification, both from ChatGPT and from Perplexity. I have to say that I agree that international diversification doesn't hurt, because we need to remember that the US is not the world. Of course, so far the American stock market has been the best performing market. But if you look at the long term, Actually, the US is not the best performer at all times. If we compare the performance of the American and European stock market between 1973 and 2010, they were always running close. Only in the following 15 years, American tech companies and the technological advancement through AI have pushed the American stock market, but again, nobody can predict the future. If you wonder what my perspective is, I believe that the US still has a long way to go as the fastest growing economy, at least in the stock market, thanks to the fast development of AI and tech, and because Americans have the highest entrepreneurial spirit. But look at how fast China came out with DeepSeek, for example, or how fast India and China are growing as economies. This obviously poses a threat for the US in the long term, and you have to ask yourself if you really want to go all in on one single economy or a single country. Now, if we compare the selection from ChatGPT and Perplexity, ChatGPT goes for VIGI and IDV, while Perplexity for VIGI and VHYD. So both select VIGI, the Vanguard International Dividend Appreciation ETF, as the first global dividend ETF, and I find it good. VIGI is similar to VIG, but focuses on developed and emerging markets outside the US. It looks for companies with strong dividend histories and has an expense ratio of 0.1%, or $10 for every $10,000 invested. Now, I want to show you something. ChatGPT says that VIGI has 0.15% expense ratio. Perplexity says it has 0.2% expense ratio. Both of them are wrong. So again, never trust everything that AI says, above all when it's about data and numbers. So as a second global position, we've seen that ChatGPT selects IDV and Perplexity VHYD. So let's break down the differences. First of all, IDV is a US ETF and VHYD is a European ETF. VHYD, which actually being based in Europe has a different ticker for every single country, is actually a pretty strong dividend ETF with an average dividend yield of 3.5%. It's one of the dividend ETFs I always suggest for European investors. It gives you global exposure to over 2,000 high-yielding companies filtered for financial stability and spread across 45 countries, with around 43% US exposure. So as a European investor, with this ETF you get both US and international diversification. ChatGPT instead suggested IDV, the iShares International Select Dividend ETF, as a second international ETF. IDV is a good choice, although it has a quite high expense ratio of 0.49%, which I don't really like. IDV, as opposed to VIGI or the first ETFs we mentioned today, is strongly focused on high dividend yield. In fact, it didn't have the best performance in the last 10 years, with just around 4.05% per year, but the 12-month trailing yield has been a whopping 5.96%. Again, remember that the total return includes the dividend yield. So the average total return of 4.05% shows you that not every year this ETF has given a high dividend yield, and also that despite a high dividend yield, the total growth has been quite disappointing. Alright, moving on, the third and last part of the portfolio is based on ChatGPT on inflation-protected and defensive dividends, as well as REIT ETFs for defensive income. In particular, ChatGPT selects here VYM, the Vanguard High Dividend Yield ETF, DGRO, the iShares Core Dividend Growth ETF, and VNQ, the Vanguard Real Estate ETF. In Perplexity instead, it's called Tactical Allocation, which 15%, which is based on two great ETFs, DGRO, the iShares Core Dividend Growth ETF, that was selected also by ChatGPT, and SDY, the Spider S&P Dividend ETF. Now, DGRO is a great ETF. It's one that I often mention on my dividend investing ETF videos, and what I like about this is that it selects companies with at least 5 years of growing dividends, avoiding high-risk, high-yield stocks. The way it does it, and it's quite interesting, is that it looks for paid out dividends not exceeding 75% of earnings, and it cuts out the top 10% of dividend yielding stocks. They do it to reduce exposure to companies with unsustainably high dividend yields. But of course, the problem is that this takes away companies like Verizon or Ultra that pay really high dividend yields. Other than DGRO, ChatGPT selects VYM, which is a great ETF, and I suggest it to any dividend investor, as well as VNQ, the Vanguard Real Estate ETF, which can be a good option for dividend income. But I have to say that I don't have great hope for the real estate markets for the next 5 to 10 years, but we'll see. Perplexity goes instead for SDY, the Spider S&P Dividend ETF, which is also a great dividend ETF that screens for companies that have consistently increased their dividends for at least 20 consecutive years, the so-called dividend aristocrats. Due to the fact that their underlying index screens for 20 years of consecutively raising dividends, stocks included in the index have both capital growth and dividend income characteristics, as opposed to stocks that are pure yield. So this is a wonderful thing. Summarizing, ChatGPT suggests 40% on growth-oriented dividend ETFs like VIG, VIGI, and DGRO, 40% on high-yield and stable payers like SHD, VYM, and IDV, and 20% for inflation protection with VNQ. Perplexity AI gives instead 25% in VIG, 20% in SHD, both as core holdings, then 35% between VHYD and VIGI for international diversification, and lastly 10% on DGRO and 10% on STY for Tactical ETFs. What I like from Perplexity compared to ChatGPT is that in the end it also shows further questions that people with similar interests ask for, like top performing dividend ETFs over the past decade, fees of the top dividend ETFs, which sectors, and so on. So we've seen that AI gave us good suggestions both through ChatGPT and Perplexity AI. And the good thing is that they respected the rules that I gave them at the beginning, avoiding weird and risky dividend ETFs with extremely high dividend yields. So I'm actually more satisfied with AI support on dividend ETFs than the one that I received in this video when I was asking for a general ETF portfolio, which, by the way, if you want to see, you're going to find it linked here and in the description below. But now I'd like to ask AI for some interesting dividend investing questions to see what it thinks about them. So, first question, is it better to invest in dividend ETFs or growth ETFs for long-term wealth building? So, it depends on investment goals and tolerance, obviously. So let's see what it says for dividend ETFs. Pros are consistent income through dividends, less volatile than growth stocks, many hold high quality, established companies, true. Dividend reinvestment, DRIP, leads to compounding returns and can help hedge against market downturns. Now, I totally agree with all of them. The only point is that the dividend reinvestment plan, even though it's the best thing you can do with your dividends, still means that you're getting dividends that get taxed and then reinvest them. While with a growth company, not having the dividends, the same money is reinvested by the company pre-tax. So the increment in capital appreciation tends to be higher than what you'd have achieved with the dividends. It's just math, because when a company reinvests, they reinvest pre-tax. And when you reinvest the dividends, it's after tax. Now, the next question, I'm gonna try it on Perplexity. How do dividend ETFs compare to just buying individual dividend stocks? All right, Perplexity also shows where it's searching for information, and then it says, diversification, dividend ETFs provide broader diversification compared to individual stocks. All right, income consistency, this is also true. And above all, it's really important if you're close to retirement and need a constant and stable flow of income. If you just own individual stocks, you're going to have a certain fluctuation of the dividend yield, which makes your portfolio not predictable and volatile. Then he mentions some other secondary advantages, but basically says that dividend ETFs are better but have management fees and don't offer the flexibility and control that you have with individual stocks. Now, for my last question, I want to be a little bit more pragmatic, so I'll just ask, right now in 2025, is it better to invest in dividend ETFs or growth ETFs? Please explain why with a short answer and use some current data. So the answer says that based on current market trends in 2025, dividend ETFs appear to be a more attractive investment option compared to growth ETFs. Recent data shows significant inflows into dividend-focused ETFs, indicating strong investor demand. For example, the Schwab US Dividend Equity ETF, SHD, attracted $7.4 billion, while the Vanguard High Dividend Yield Index ETF, VYM, pulled in $3.7 billion. What I like about Perplexity is that it also cites the source of the information. You can click on the source here and land directly on the article that Perplexity cited. Alright everyone, I hope you enjoyed this video. If you did, don't forget to subscribe to the channel and drop a beautiful like to this video to help me out a little bit to grow this small channel. Thank you so much for watching until the end. I wish you a great day or evening, and I'll see you in the next video. Ciao!